it's a crapshoot, right? We don't know what the number was going to be, and if the number
Yeah.
was bad, it'd probably be down, maybe. So I don't know. I feel like the market is. I think Harold mentioned or Ken mentioned that um, the market's oversold by many measures, and it doesn't mean that it has to move up for any extended period of time. But I think a lot of the complacency is out of the market. I think there's quite a bit of negativity, and you can look at many of the contra indicators. The VIX had a little spike up, put to call ratios elevated. Investors intelligence is showing fewer bulls, more bears. It's not any extreme level, but you wouldn't expect it to be, because this has been kind of a 10% consolidation, following a very strong several months of the market. You wouldn't expect us to, we're not in a big bear market territory, right?
Right.
So, but even the AAII survey showed in the last couple of weeks more bears than bulls. So I think a lot of the complacency has come out of the market, and a lot of there yeah, I don't know if we're going to head toward a recession or not, and that's, I think, a lot of the commentary here, where we're going to have a recession. And I don't necessarily know what that means for stocks, though, because if you pull up a weekly or monthly on the NASDAQ, we've gone almost 2 years, we haven't hit a high. And that hasn't happened in a long time. That hasn't happened, I think, since the financial crisis. So, 2008. So it's not like stocks haven't responded and had a tough time. And
Right.
that's just the indice, so the NASDAQ fell about 38%, which was the worst pullback since the financial crisis.
Hmm.
But we all know that, underneath that, there's the damage to the growth stocks, and like the Shopify's and the Zooms, and Nvidia fell 70%, Tesla fell 75%, Shopify fell over 80%. It was incredibly devastating, right? So it's not like stocks didn't react to a bad market. I mean, it's been a terrible couple of years.
Hmm.
So I don't know that. I mean, I think, they say stocks, the market discounts the bad news, well, it did. I mean, all these stocks did go down. So I don't know why they necessarily have to, now that many of them are in, make a little bit more sense with regard to their price to sales or price to earnings, if they have earnings. I don't know that even if the economy continues to slow, that stocks have to go through like another bear market or something. That's just my personal opinion, but that's what I think.
The attendees are really appreciating this macro look too at the market. And I just briefly, Charles had shown the latest AAII survey. I'm not going to share it again, but I just want to note that in the week ended September 27th, so that was just a few days ago, the bullish camp, according to AAII's individual investor poll, has fallen to 27.8%, and then bearish at 40.9%. So we do have kind of a crossover for the bears exceeding the bulls. Those who are neutral are at 31%. So basically, one out of every four is only one out of every four individual investors, and these are very smart, capable folks who are not professionals. They're feeling the heat of this market. The historical average is 37.5% bullish, 31% bearish, and 31.5% neutral. So we have that going for us. Earlier in the week, we highlighted the fact that the zero bull indicator on Marcus Smith is still well above the zero bear, or the investors intelligence bearishness view among newsletter writers. So we'll have to see whether it takes another leg down in this market for even more of these psychological gauges to point to a potential market bottom. But great point by Charles about the fact that, hey, the Nasdaq is just still trying to come back from one of the worst bear markets we've had, or at least declines in 2 decades. Let's now
Dave,
bring,
can I say one
of
quick
course, Charles.
comment on
Yeah.
that was I was following the AAII survey really closely, and it's something I had never really done before. But if you go on the AAII website, you can actually download the entire history of that survey. And I downloaded it and kind of created a little 8-week moving average of the bulls and bears, or the bullish and bearish sentiment. And we went through the longest period in the history of the survey during this correction we've had since November of 2011 to just a couple of months ago, the longest period of more bears and bulls, even worse than the financial crisis,
Wow.
which was literally the global economy is falling apart. Our whole banking system is at risk. So we haven't even had a recession yet, right? So I just never imagined that it would be that bad, because fundamental conditions, I guess, we haven't gone through a rate hike tightening cycle like this in decades. So maybe it's unprecedented in some ways. So, I think that it's almost like it was a new thing to experience, and the market reacted, really reacted poorly to that. And so, but yeah, that AI survey showed there's never been a period in the entire history of the survey where there was so much persistent bearishness over bullishness over, basically I think I counted around 70 consecutive weeks of the moving average that I put on there, more bears and bulls. So,
Very interesting.
and when you fall, and when you come out of these periods of that much where the sentiment is so negative, you're normally entering a bull market territory, where now that you kind of get the reverse of that. So that's another reason why sometimes I get overly positive. I just look like we've had so much. It was so tough that it's normal to bull markets that's what I'm used to.
Yeah.
And
Oh,
it's been a bad couple of years.
it really has. And thank you for highlighting this feature on the AAII.com website, downloading the complete historical data. I'm a very proud active member of the LA chapter of the AAII. I just recently gave the IBD take and a quarterly commentary. We had two fantastic speakers, both on the institutional side. One lady, Gina Sanchez, she works with pension funds. She's also a consultant to one of the local city employee pensions, and so heard some really interesting things. You might be active in your own LA, your own AAII local chapter. AAII has been an ally and a friend of IBD, and just wanted to share that love for them as well. Please check that out. And Charles, did you say a 10-week or an 8-week moving average of these numbers?
I used an 8-week moving
8 week.
average.
Why
So
why
I
8 weeks?
just,
Is 2 months? Is that kind of a good
yeah,
figure?
I just wanted to kind of smooth out the data a little bit, because you
Yeah.
do get in that survey, sometimes you get these little blips where you get a few kind of counter rallies, and the sentiment just improves very quickly, and you may have a week or two where obviously where people just get very bullish very quickly.
Hmm.
So just smoothing that out, and that just seemed to be I think I tried different ones, but that I was kind of comparing it to the 2008 period, where in 2008, when we had the financial crisis, you had, I think, maybe 40 or so weeks of just persistent more bears and bulls on that moving average. And um then you went into a period of several weeks where there was more bulls than bears. And then when we, do you remember, we hit bottom in like October. No,
Right.
I guess, or toward the end of the year, and then we bounced, and then we had, the kind of undercut in the fall during all the way into March.
Hmm.
We bottomed in March. And so we had several weeks where the sentiment shifted back up, and then you had another kind of persistent drawdown. And but with this past couple of years, at least if you look at kind of you smooth it out on the 8 week, you never got enough bullishness during that entire period to where the bulls kind of on a, if you smoothed it out, were above the bears. So I mean, this was just like a very extended period of bearishness, in
Hmm.
that survey.